The market was up almost 2% last week, despite the impeachment vote in the House of Representatives, and now has totaled 31 record highs for 2019.
The U.S. markets continued their historic run last week as the NASDAQ and the Russell 2000 were up over 2%, while the S&P 500 was up about 1.6%, and the Dow Jones was also up over 1%. And now the NASDAQ, still leading the way this year, up almost 35%. Foreign market stocks were down about 0.7% last week, but emerging market stocks had a strong week as they were up over 1%. And now emerging markets are up a little bit over 14% for the year. Foreign stocks are up 18% year to date. Today we're looking at a chart of the New York Stock Exchange Index, and this consists of all of the companies that are listed on the New York Stock Exchange. And on here, there are over 1,900 overall companies, and 1,500 companies are US based. We wanted to look at this chart today because it gives us a good idea of the health of the overall market. And as you can see on this chart, there was a major market-wide breakout over the past couple weeks. And here we're looking at the weekly chart, and at the beginning of 2018, the New York Stock Exchange Index made its all-time high, and as I mentioned, we just broke that level and have been continuing higher. The chart pattern we're looking at here is known as an inverse head and shoulders pattern. And as you can see here, at the beginning of 2018, we saw the first shoulder that was put in, and that was a pullback in the market in the first quarter of 2018. Now this was followed by a rebound, but then, as you probably still remember, in the fourth quarter of last year, we saw a larger correction, and that was the head of this chart pattern, which is the second blue line at the bottom. That was followed up by a rebound at the beginning of this year in 2019. And then in the middle of 2019, we saw another small pullback in the market, back to about the same line as that first shoulder. Now, from there, we've seen a strong rebound here the rest of this year in 2019. And as I mentioned before, we saw the overall market break out over the past couple weeks with a continuation higher, which has confirmed this chart pattern, again, as being a very bullish signal for the markets moving forward for the rest of the year.
Last week's headlines were dominated by the impeachment vote, and the House of Representatives voted in partisan fashion to impeach President Trump. And the final votes tallied came in at 230 to 197 and 230 to 198 for the two different accusations. All Republicans voted against and were joined by only a handful of Democrats. Now, the question is, what's really going on with the articles of impeachment, as they have not been delivered to the Senate yet? And many legal scholars are questioning if President Trump has actually been impeached yet or not. And they cite that impeachment is a process, not just a vote. So we'll have to see what happens with the articles of impeachment moving forward. There wasn't a whole lot of other news stories from last week, so we wanted to take a look back to see what a difference a year can make. In 2018, the market was experiencing one of the worst sell-offs that we've seen in a decade. And the market was down 19% up until Christmas Eve. The Dow was below 22,000, and the stock market was down over 9% in December alone. This was the worst month that we've had since February 2009. Fast forward to 2019, and the S&P 500 has rallied sharply ever since, up around 31% year to date. And this is the second best year we've seen in a decade, just slightly behind 2013's 32% gain. Also, the Dow is over 28,000 and has rallied more than 6,000 points off of its lows. Lastly, if you can remember back to December of last year, we were in a heated trade war with China, and most analysts were saying that that trade war could lead to the next recession. And fast forward to today, where China just announced that they're going to be cutting tariffs on many goods imported from the United States. A phase one trade deal is done, and that good faith move cutting the tariffs was to hopefully get phase two done in 2020. Looking forward to the weeks ahead, we're entering the holiday trading season, which means shortened trading weeks, lower trading volume, and that tends to lead to less volatility in the markets. If you like our video, please do us a favor and share it. Merry Christmas, and thanks for watching.